we took in over the weekend. And if those were able to, if we didn't have any exceptions on those with tax IDs not matching up, or we had misinformation, or maybe their registration with Secretary of State was dissolved, assuming it went through without any exceptions, all of those loans were funded, which totaled about $2 billion, and that was just for Synovus. So you can imagine if it's a $350 billion package, $2 billion alone with Synovus, and there are a lot of banks out there, that money essentially, it ran out pretty quick. So what happened, the biggest challenge is business owners were allowed to file immediately, and then the self-employed or the 1099 contractors, they were all delayed intentionally by 1 week. So the earliest they could apply was April 10th. Well, the banks were notified on April 17th that the E-Trans portal was basically turned off by the SBA. They were no longer accepting applications at that time. So as you would imagine, banks have a lot of applications that are essentially waiting at the doorstep of the SBA with the anticipation that they're going to reopen the E-Trans portal to continue accepting P3 applications, and then they're going to be pushed through as quick as they can be to get them approved. Besides that, I can tell you, every bank probably wasn't prepared. Everyone probably had a different experience if they've applied. The banks that had, have always invested in people like Synovus. We had 400 volunteers step up. They've been working around the clock, 24 hours a day. I think in total, we've taken 19,000 applications. And I can tell you right now that there's over 8,500 that have been underwritten and they're completed, and they're ready to be pushed through the E-Trans portal as soon as it gets reopened. And I'll pass it on to Ron.
Okay, thank you. So to follow up with what William said, my clients, William, have experienced the same thing you were speaking about, which was either needing to put documents together in a certain format that each bank was asking differently, and also the time getting them together. So you are correct. We did experience exactly what you said. But what I wanted to do was I wanted to break down a couple of pieces within the P3 program, and that's the different components. And then that's also the documents that were needed for the components. So for small businesses, what we found that you were going to need to be able to do as a component was have proof of salary or wages, and that included vacation and sick pay. That was not to exceed $100,000 per person. Proof of commissions that you pay, proof of group health insurance, proof of retirement benefit costs that the company pays on behalf of the employees, and any state and local taxes that are paid on employee compensation. So those were the components. And after the call that we have here, if anybody needs those, my office would be happy to supply them. What we also found was that for self-employed, which are for sole proprietors, Schedule C was the item that most was looking at. So most of the meat of all this was really for the small businesses. So those are the components. I'm going to talk about the documents that were actually needed. For the wages and salaries, everyone was asking, or all banks were asking for the 941s from the 2019 tax year and the 940 report, which is the annual report. So if you have a payroll service, you were able to generate that. If you didn't have a payroll service, you needed to pull out your records from the prior quarters and gather those. As far as proof of commissions, as a component, they were asking for copies of the 1099s. So we were able to go back for the client and gather the 1099s. As far as proof of health insurance that was paid through the group plan, we were asking our clients to gather their statements together. And for proof of retirement benefit costs, that the company paid, most of the clients had some invoices from their plan administrator, and we were asking to pull that information from them. There were some state and local taxes that are allowed, and those are really the unemployment quarterly taxes that you pay, whether it's only Georgia, the DOL 4N form, or multiple states if you happen to have employees in multiple states. So those were the main core documents that we had been pulling and gathering for our clients and uploading. There was one other item that came out a little bit further along as this evolved, and they were looking for a breakdown or a statement of employees that were actually employed in the last 12 months in a breakdown of their payroll. So we created that. If you have a payroll service, a lot of the payroll services have these quick sheets or forms that you can generate based on dates, and that was a big help for my clients that had payroll service. What I wanted to share with you also was there's a lot of changes going on in the retirement plan distribution world these days. So let's talk about that. This may be very helpful for those who may have been affected by the coronavirus, whether they're ill, a loved one is ill, or if in fact they've actually had a shortfall in income. You can now distribute up to $100,000 in aggregate, doesn't have to be all at one time, in an aggregate amount. And if you're under 59 and a half, means an early withdrawal, you're able to avoid the 10% penalty. So a lot of my clients now have decided to tap into their retirement, pull money out because they're under 59 and a half that they need for their shortfall in income, and actually avoid the 10% penalty. That's part one. Part two is that if you pull out less than 100,000 or up to 100,000, you actually can have 3 years now to pay the tax on it rather than all in the same year you take it out, which is a big difference. And if you decide to put the money, or what we call recontribute the money back within 3 years, rather than the normal 60-day rollover period, you actually don't have to pay any taxes if you put the money back within 3 years. So it could be a big win-win-win, which is an unusual thing for retirement plan distributions.
Ron, let me interrupt you for a minute.
Yeah.
I want to introduce the fact that Jeff Chernoff, our founder and president of the BCN and CCA, is with us. Okay. Jeff, are you there? Hello, Jeff? He may have it on mute, but I did want to recognize that he's back on. And then Tricia, are there any questions at all coming in?
For William, Angela was wondering, what's the biggest loan that your bank has provided?
I have no idea. I do know that there were some big loans out there. So, but hard to say. I mean, $2 billion was stretched out over a lot of clients and a lot of loan requests. But to have those exact numbers, I'm not real sure.
Okay, Ron, if you want to continue.
Yeah. Well, just so you know, the largest loan for one of my clients was about $1.3 million. The average has been between $40,000 and $80,000 for the small businesses. Okay, so 401k borrowing. If you have a 401k that's active, you can borrow normally up to $50,000 as an aggregate amount. Now they've extended that to being able to borrow $100,000 from the plan, or 100% of your amount if it's less, as long as you're vested in the balance. So that's a unique thing. You can actually borrow up to $100,000 from your plan, and that's unique and a big change. If you have yourself or anyone that's on a RMD or required mandatory distribution for 2020, you could actually stop the distributions. You do not have to do them any longer, and you can restart up again in 2021 with no penalty. So a lot of my clients who are retired, they still have a good income. Because of their age, over 70 and a half, they have to take the distribution. And as a result of that, they're paying tax on money they actually don't even need. They're just required to take it out. They can put a halt on that for the rest of this year and avoid paying tax on monies they don't need. So we all know April 15th is the deadline. This has been an interesting change for my business. So April 15th as the normal filing deadline has been extended to July 15th. That also included estimated tax payments for Q1 and Q2. They've been moved to July 15th. There's some other dates that happened around the April 15th date or some unique things. So for any late filers out there, if you have an unclaimed refund from 2016, you have to July 15th to claim that refund. So basically there's a 3-year rule. You can go back 3 years. That would have ended on April 15th. That's been extended to July 15th. And if you need to get your tax return filed but can't do it by July 15th, you can still make your extension federal and state, and you'll have until the October 15th deadline. So a lot of people have been asking me, has the extension deadline been changed? And so right now it's still October 15th, but by July 15th, if you file your return, you're going to need to make sure that you file an extension to extend it to the October 15th date. So those are important items that we're finding we're getting a lot of questions on or around. It was interesting for me to find out that the retirement plan distribution of $100,000 was happening because I happen to have a lot of clients that took advantage of that over the last couple of weeks. So, Deborah, that's really the information that we have at this time that we felt was important for the BCN members to hear and understand. And we're available if anybody has any questions later on.
Ron, is perfect. Thank you. Tricia, let me ask you if there's any more questions in between.
Yeah, Russ was asking about the estimate for the banks on how long the PPP money will be available. So maybe to William on that.
Sure. Well, the P3 money from the original 350 billion is gone. So I think the next part of the presentation will get into what's coming down the road, hopefully between the Senate, the House, and the President. But there is some good news for small business owners and for the self-employed around P3.
Okay, before we go to Christina, I wanted to recognize again Jeff Chernoff, our founder and president, has joined the call. Jeff, are you there?
I am. Can you hear me?
We can hear you now, yes.
Okay, just a very quick thank you, Deborah, for taking the helm while I was at a commission temporarily. And a special thank you to our 3 excellent panelists. I'm ready to move on, and I guess we're introducing Christina Moore next.
Yes, Christina did share her background, so she's now going to talk about her focus, her 3 focus areas. And then only other thing I want to mention, Megan, there's been a few people that still have had trouble logging in, so I've asked them to log out and log in. But if you could send a link to Craig Peter Personal Training in between, I would really appreciate it.
Absolutely, I'll try that. And if people continue to have issues at this point, probably the best thing is that we are recording and we can send the recording after.
Right.
Yeah, thank you.
Christina, if you'd like to share.
Yes, hi. Thank you, BCN and William and Ron. Great information. I enjoyed listening to both of you. So I'm going to be talking about the PPP program and EIDLs. And then I just want to start off by saying I don't know if anything's passed while we've all been on this call, but I do, Taylor English does have TED Decisions, which is kind of our legislative group connected with Taylor English Duma. And I have heard from them that we understand there'll be an additional funding of the PPP program. It doesn't look as if that they will be modifying any of the actual legislation or guidance of the PPP program with the modification to the act. They're just going to be adding more funds, and it looks like the funds will be almost double the amount originally allocated. Again, this is not confirmed yet. This is just what I've heard from our legislative team that are in contact with senators and congressmen and women. So hopefully that is the case, because I know a lot of businesses are waiting to or either have applications filed and hoping their banks are going to push those through, or waiting to get those filed. I would recommend, if you've got an arguable position to file for a PPP, I'd be reaching out to your bank now and trying to get in that pipeline. So with that said, we've got two different programs that kind of intersect in certain aspects. And I'm going to do the EIDL first, because Economic Injury Disaster Loan is really an SBA program that has always been in place. And it is something where if a state declares a state of emergency, businesses can apply for an economic injury disaster loan. What they did with the CARES Act to kind of supplement the EIDLs, which are already in place, was they added an up to $10,000 advance to go with an EIDL. And what that was is essentially it was a grant. They said businesses could, when they apply for an EIDL loan, they could also basically check a box and get a grant of up to $10,000. Unfortunately, with the EIDLs, I had thought that was going to be kind of a bridge to when they got the PPP program up and running, but I didn't hear a lot of people that either received the advance or got a loan through an EIDL. The EIDLs were filed directly through the SBA, unlike the PPPs, which are filed through lenders. So you can file an EIDL directly through the SBA, and they had a 3.75% interest rate with a 30-year term. That's generally what the EIDLs offered. I have heard people receive their advance in the past couple weeks, but I don't know anyone that's actually gotten an EIDL loan. So I feel like that program kind of fell short on actually lending or advancing grants before the PPP program got up and running. In part, that's great that the PPP program was so quickly implemented, but I don't feel like the EIDL was help to a lot of businesses that maybe businesses had thought would be the case. I do know that under the new legislation, they're adding more money to the grant aspect. So I think those funds have been used up, just like with the PPP initial funds. So I believe that you might see more of those advances and or loans coming out of the EIDL going forward if that legislation's passed. So that's quickly EIDL. So I'm going to get into the PPP program. So the PPP program, unlike an EIDL, is filed with your SBA lender. What it was is a program, while it's a new program, it really broadened SBA 7A loans to say that basically businesses with 500 employees or less were eligible. Now, that doesn't mean if you have more than 500 employees, you're not eligible, because the provisions also had an alternative size standard, which looked at your net income or gross income, but then it also had that you could qualify for an PPP under the SBA NAICS size standards. And those size standards often gave a greater number of employees to certain businesses based on their industry code, or a gross receipts size standard. So the program basically generally allows any business with less than 500 or less employees to be eligible, but also that doesn't mean if you have more, you're not eligible. You could also look to the size standards of the 7A provisions. Tied on to that there are affiliation rules that could increase your size standards. It's just not your business. If you're an affiliate of other businesses, you have to consider the affiliate's number of employees or gross receipts. The guidance for the PPP did limit affiliation to a 4-pronged test, generally control, stock options, management control, and then relationships. Those really kind of left the status quo in place, although they simplified the determination. It really, I don't think, helped a lot of businesses avoid the affiliation issue. So I'm not going to, the affiliation issue is kind of a big confusing rabbit hole you can go down, and that's really been on a specific company by company basis that we've been going down that analysis. so going on with the PPP program, it's been determined that it's a 1% interest rate with a 2-year term. And I've heard mixed things. The CARE Act as written, the PPP provisions of the CARE Act as written says the term will start on forgiveness, on the forgiveness determination. But I have heard banks say, no, we're just starting the term on origination of the loan. So I've heard mixed things on that. So I would just assume it's a 2-year term on origination of the loan at a 1% interest rate. As William had said earlier, it's the determination of your max loan value is your payroll costs, which Ron had gone over in detail what all was included in that when he was going through the process of determining of what you needed to get to your SBA lender. It's generated payroll costs. You've got the health insurance premiums, retirement benefits, state and local taxes. So you'll take the average month looking back 12 months or looking back over 2019, and then you'll multiply that average monthly amount times 2.5, and that will create your max loan value. Then, you get things forward with your SBA lender, they approve you, and on the origination date, they'll issue the max loan value, which you would apply for and which was approved. And then an 8-week clock starts to tick after the loan is originated, where you've got 8 weeks to use the loan for permitted purposes, which are generally the payroll costs, just like you had identified on the max loan value, utilities, rent obligations, and then debt interest, that's real or personal property, mortgage interest. So those are the 4 buckets of permitted uses. So during the 8-week period, you will use your PPP funds for those uses. You will then document it and apply with your bank for a forgiveness of that portion. Now that portion, you could achieve 100% forgiveness of your loan. You could, because if you were going back, if you recall, it was 2.5 times your average month, and you've got 8 weeks. So you've got 2 months there. Plus, you basically have an additional 25% for those other permitted uses, utility, rent obligations, and interest. So you could achieve 100% forgiveness if you documented everything. The guidance has really restricted the money to be, it's got to be 75% for payroll costs and 25% for those other uses. The CARE Act provisions didn't have that real strict limitation, but the guidance has now put that strict limitation on your use of the funds. Your forgiveness amount can be reduced if you did not get your number of employees back up to prior levels during either the 8-week forgiveness period or no later than June 30th. It could also be reduced if you've reduced salaries by more than 25%. Now that kind of excludes those making greater than $100,000 over the 8-week period. On the head reduction piece, that is you could replace Mary for Susie. That's not specific. Mary doesn't have to be hired back on as Mary, but on the wage piece, on the reduction in wages, the way that's written appears to be that's Mary for Mary. If you've reduced Mary's income by more than 25%, your forgiveness will be reduced by that amount. So those two seem to be different, although there hasn't been a whole lot of guidance on those. So I think the banks are waiting on some guidance to come out, or they're going to make a determination on those sorts of things. I will say the CARES Act, unlike the eligibility piece and other aspects of the PPP provisions, the CARES Act did make a point of stating in the act that there is a hold harmless for these SBA lenders on the determination of forgiveness. In my opinion, it gave the banks a bit more discretion or ability to feel comfortable with a determination of forgiveness, because the SBA is saying you're held harmless. We're not going to come after you if you made a mistake. Now, with that said, they do have to have documentation supporting the decision. So I partially feel that's why not a lot of guidance has come out on the forgiveness piece, but they might be putting guidance out. It's just I think things have been moving so quickly. They were initially putting guidance out on eligibility and those sort of things, and they haven't gotten that yet. So generally, like I said, you can get max loan value 2.5 of your average monthly payroll, then your 8-week forgiveness clock starts to tick on origination of the loan, you'll apply for forgiveness with your lender. The lender will have 60 days to review and make a determination of forgiveness, and that could reduce the loan issued by 100% if you're able to achieve maximum forgiveness. If you're not, anything remaining on the loan is at a 1% interest rate with the 2-year term. And I would assume, for purposes, the 2-year term started on origination, even though arguably it should have started at the determination of forgiveness.
Christina, let's see if there's any questions on some of the stuff you've just shared. Tricia?
Is the EIDL a separate application from the SBA grant program?
From the SBA grant program, no. The SBA has a link. Now, I think the link was taken down when funds were exhausted, but hopefully it'll come back up when they issue the second round of funding. It is one application that you apply for, an EIDL loan, and in the loan, you're literally checking a box. Do you want to be considered for a grant of up to $10,000? I heard that they're determining that grant amount based on your number of employees. So if you have 20 employees, you could get the 10. If you have 2 employees, you're looking at $2,000. But it is within the application for an EIDL loan that you're checking a box that you would want to also be considered for the grant or advance.
Yeah, you're correct, Christina. This is Ron speaking. I've had 2 clients now receive the EIDL advance, and it was based on the number of employees they had.
If you
This is William. Can I add to that too?
Mm-hmm.
If you receive up to $10,000 on that initial grant, on the EIDL, it does say that portion is also forgivable, similar to the P3. If you are receiving additional money for EIDL, my understanding is that has to be paid back in full over 30 years.
That's right. You would have a loan. You're actually going to have a loan, but for the advance piece, which is a grant, which does not have to be repaid. Now, to William's bringing that up. Thank you, William. You cannot get a advance, and if you get an advance, it will reduce your forgiveness on a PPP. You don't get to double dip. So if you get a PPP loan and you've gotten an advance, they're going to reduce your forgiveness piece by that advance. That's not saying you're somehow missing out. It just means you cannot double dip. They're going to count any sort of advance within that forgiveness piece. And then also I wanted to point out that you could have both an EIDL and a PPP loan. You could have both. But if you use the EIDL for the uses that are permitted under the PPP for payroll, utilities, rent obligations, interest, then you will be required to refinance the EIDL in the PPP. So you could carry both loans, but you can't then use the EIDL for the uses of a PPP. If you want to have both, you'll use the EIDL for operating costs and the PPP for the remitted costs, or you could always refinance the EIDL under the PPP if you're going to use them for the same uses, which would only be the permitted uses of a PPP. And also to that point, after you've gotten your forgiveness determined, you can only use any remaining funds on a PPP for the permitted uses. The PPP is really just for those 4 permitted uses that we identified.
Okay. So now in the time we have, why don't we do, if we could, everybody, go to your takeaways, which is really your recap. And then that I think will bring people up to date that have joined us a little bit late. So William, do you want to share your takeaways from what you've shared today?
Yeah, I'll tell you that for all those that have not applied already and you're trying to apply, it's most likely your bank will not be accepting any more applications, but PayPal actually might be a good option for you. PayPal was actually processing P3 applications up until the eTrans portal was turned off. So there might be a chance. If I think $310 billion was approved by the Senate yesterday, it's got to go to the House and then the president. But let's assume that money gets allocated for P3. Reach out to PayPal if you need to get an application in. That might be your best option at this point.
And William, could I share also, I did hear that in addition to the extra funding, while the changes are minimal to the actual provisions of the PPP, they have increased that community banks are going to be allowed to be lending under this. So if you bank with a smaller community bank, they might now be able to take a PPP loan where they weren't previously. But I don't think they're going to know that until the actual additional act is approved. That's just something I had heard that might be coming down.
Yeah, and I'll also say for all the loans that were approved by the banks, that loan sits on the bank's balance sheet now, and the bank is going to ultimately be responsible for going through the documentation. I believe you can start submitting for your forgiveness July 1st is what I heard is the earliest you can do it. There's still more, I guess, legislation or information that has to be ironed out by the SBA on that part, but every bank is going to have a team set up to go through that process with every client that did receive the funds, and the intent will be to be sure that it is forgivable for every client.
William, one other takeaway you have is understanding the type of checking account or bank relationship required to apply.
Yeah, there was confusion early on for some clients. I mean, if you're a company, if you're ABC Inc. and you only have a personal account with the bank, the expectation is that you needed an ABC Inc. bank account because the bank was required to do the know your customer piece, to go through and verify that they actually knew who they were dealing with. There's a lot that goes into underwriting for a company. If you don't really know who the officers are or who the managing members are, there's a lot of risk involved with potential fraud. So it was really important that you worked with your bank. If you're ABC Inc., you needed to be sure that you had an ABC Inc. operating account to process that loan.
Tricia, are there any new questions? No? Okay, Ron, what about your takeaways?
Okay, good. So there's one thing I wanted to mention regarding this. I'm hoping everyone who had an opportunity to apply for the PPP or P3 loan actually utilized the components that I discussed. But what I wanted to say is that once you get your loan, I want everyone to consider tracking how they're using the funds. So when they do ask for forgiveness, they have good proof, good record keeping. So this is one of those times when you really need to keep good records, and you need to really make sure that you're using the funds for the right purpose. So that's one of the takeaways that I wanted everyone to know about. In regards to retirement plan distributions, I wanted everyone to know that this could affect your bottom line. This could be a good year to consider if you're had any thoughts of taking monies out of retirement plan. This could be, from a tax planning standpoint, a good year to do that. And also, I wanted everyone to understand that it's important that we not sit back and rest because the extension of the April 15 has been July 15th. Try to get your documents in and get it done before July 15th so you don't have to go on an additional extension.
That certainly helps you too, doesn't it?
It certainly helps myself and others in my industry. It's just a unique time that we're in. So most people in my industry probably wouldn't even be working today, or they just be getting back from taking 3 or 4 days off. And thinking about how for June and July are usually slower months because most go on vacation with their families, and then it starts up again like a mini tax season in August. This would be a great opportunity for everyone to have their taxes done by July 15th and not have to go on an additional extension. So I would like everyone that I know that I work with to focus on that. And also for those out there that have other professionals they're working with, it would be a good opportunity to have everything done by the July 15th deadline.
And Christina?
Yeah, and Ron, just one thing on Ron's points. I wanted to mention that the dates, as Ron indicated, are moved to July 15th. But you've got, then if you pay estimated installment payments, you've got your first and your second due on that same deadline. So while it's been extended, I don't necessarily know if you want that big double whammy on the 15th. So to his point of getting it done, I would support that. So you've got a little bit of time between things, because it's
Well,
not like
that's a great point, Christina. That's a great point. So, I always say that April 15 is an unusual date because it's the due date for the tax returns. It's a due date if you're going to file an extension and have to pay your tax for the prior year. And it's also the due date for the first quarter of the current year. So this is an unusual one where we actually have the same three things happening, but they're all happening at one time and adding the second quarter in. So you may want to consider staggering some of that and not wait until the July 15th deadline. I agree with you on that, because that could be a hefty amount of cash that you're going to be writing a check for. But I also want everyone to understand something which seems to be an issue with a lot of people asking me. Just because you're extended to file your return to July 15th doesn't mean you don't have to pay the taxes. You have to pay the taxes on July 15th to extend to October 15th in order to avoid penalty and interest accruing. So if you can't have your return done by July 15th and you want to extend to the October 15th deadline, you need to make sure you pay your tax in full on July 15th for the prior year.
Wow. That should be a big slide there, right? Christina, were there any other takeaways before we go to a question?
Yeah. Takeaways real quick. If you have less than 500 or less employees, great, but that is not the sole determination of being in or out. Also, the guidance that has come out is not law, but it is dictating things, and the SBA lenders are relying on it. I think I've got some other takeaways on here, which everyone, should read and digest. If you have questions on whether you are eligible or affiliation type issues, those are kind of bigger discussions, and obviously Taylor English can help on that. But those are kind of the main takeaways, and the points I've put more points on the takeaways because I think they're going to be shared with the group, and I think all of those are important, but I did just kind of go over those in detail. So I know we want to open it up to questions and kind of wrap up. So I'll stop talking now.
No, it's been great. Trish, any questions that you've received at all?
Yeah, what is the last day for personal tax and business tax filing now?
Okay, so the April 15th, which is the personal tax deadline, has been extended to July 15th, as if July 15th was April 15th. If on the personal, if you want to go past that filing for 2019, you have to file an extension, the 4868, and that will give you to October 15th. For S Corps who haven't filed, they needed to file by March 15th before the extension came about. So if you hadn't filed your S Corp return by March 15th, you would have had to file an extension by March 15th before the government actually, or the president, extended the April 15th deadline. So if you're an S Corp or a partnership, you needed to either file by March 15th or you needed to file an extension by that time frame.
Okay, very
And
good.
that would take you for 6 months out to September 15th, that extension.
Tricia, any new questions? Okay. So I one of my thoughts is the synergy here that we have with the three of you. And Jeff, I'm sure if you're there, you can hear. I think this has been of great value, and we will go to you, the three of you, throughout the year, because we see this as the first step towards doing some more of these programs, and in particular on this topic. We have a few other members that are in payroll, that are in finance and operations, that are in other industries that can add HR. So I think we can go back and forth throughout the year. We'd like to come back to all of you. Question I have is, we've heard a lot about how a lot of the larger companies have gotten their checks already, whereas the small guys, solo entrepreneurs and so on, have not. Is there anything proactively that you could share that our members that are consultants or have smaller businesses can do to be on a level playing field?
This is William. I can address that. I'm hoping that all the small business owners, the sole props, the 1099 contracted employees, that they've already all applied. and hopefully their bank has already underwritten that application and just has it ready to go as soon as the e-trans portal is reopened, which is the expectation. Then hopefully your bank will push it through, and that it'll get approved by the SBA. That's the hope. I know that like right now, if we took 19,000 applications for Synovus, about 6 or 7,000 of those came for sole proprietors and the self-employed. And the majority of those have not been approved yet because the money already ran out. So we're hoping those do get approved on this, I guess we'll call it round 2 of the money.
Amy, let's go to the slide where we have how to connect with our members. Are we on that one right now? Okay, great. So putting that up, William and Ron and Christina, the best way for everyone to connect with you from this point forward, I know that we're going to post this on the BCN under BCN events. We're also going to make it available under member news, and then we're going to send an email with the recording from today, as well as the slides. But any other ways that you'd like to share for our members to connect with you?
Email's the best to get a hold of me, which is up there.
Yep.
Email's
Okay.
the best, Ron.
Either phone, call me or email me.
Okay. And then Jeff, are you there?
I am.
Okay. Before we go to the last slide, would you like to share any thoughts?
Well, I just want to say that I want to thank all of our guests who attended today, and I hope you all found it as informative as I did. And again, my thanks to you, Deborah. You've done a great job at the helm, and to our 3 panelists, wonderful job, and I thank you all.
Well, thank you. I
very
do
much.
want to share, thank you, Ron and William and Christina. Let's go to the last slide. We have our roundtable coming up. We are going to stick with a video conference since we're all still a little shell-shocked by everything. We want to be careful with the social distancing. So we are going to do the video conference. It'll be May 14th. It'll be 1 hour, 11 to noon. We'll be working again with Megan Clare with the AJC Cox Next, social media marketing manager, and with David Pierce, co-founder of Procom Advisors, as our executive producers, and then our steering committee that we have with us today. Our keynote speaker I'm very excited to share is Robin Moriarty. Robin is a Fortune 500 global business executive and thought leader. Her topic is going to be how to develop your muscle for managing through this uncertainty. She has a terrific book, What Game Are You Playing? And it's tied right into that topic. So we're very excited to have her. She will be raffling 2 of her books. Davios was set up to host us, so we'd still like Davios to be involved and do their spotlight. We will be sharing our new and renewal spotlights as well. And I'd like to go back, if I can, Amy, to the slide where we thank everybody. So if you go back to that first slide. We'd like to, Jeff and I would like to thank our volunteers, all of you for helping this happen today. And again, that's the Atlanta Journal-Constitution, Cox Next, and Procom Advisors, Mythos Media, Amy Henkel, and Roger Knipp. Amy for sharing our slides and your input, and Tricia again for the messaging and chat, and Duffy Dixon. Is there any other questions we have, Tricia, before we close? Okay, any final remarks, panelists?
Get your applications in. If you want to get in on this second round, find a bank, get them in.
And Jeff, I shared earlier, we're going to post this today, the recording and all under BCN events and member news. and also through social media. And then we're going to do an email. So I just want to make sure everyone knows that that's how you'll be able to hear about this, and if you were not able to participate today. So we're running short, so we're good.
Deborah, I wanted to say one more thing. Because I did get an email from a client yesterday saying, oh, basically, if you've seen all the media, I don't really think these loans were meant for small businesses like me. You know, there's been all this media about, you know, Shake Shack and the steak. Don't get me wrong. Those businesses got it and they were eligible and it was written to have them eligible, but small businesses are getting these loans. I got my kids' preschool funded on Monday of this week. So do not be discouraged by the news. Do not think, oh, it's not for me and I just will stop trying. You know, work hard to find that bank that's going to help you through this, because if Synovus, if you've got a good relationship and your banker is willing to work with you, you could get funded. I mean, don't listen to the media and just think, I'm not going to try. It's not for me. I was disappointed to get that email yesterday, and I tried to encourage that client, hey, if funding comes out again, don't just think it's not for me.
Well, and to that end, I will share a testimonial, William. I was not able to get the application through with Wells Fargo because they had run out of funds or were not taking any more applications. And I reached out to William, and William, you've been able to help me. And I got a call today from one of your analysts and for the SBA. So things are looking good. So it is possible. Well, again, on behalf of the Consumers' Choice Award and the Business Community Network, we thank everybody for being on the call today. I will share, and Jeff, if you want to, about the CCA, that we are launching our program this fall in terms of the winners event. You want to share a little bit more about that?
Well, just basically to congratulate this year's Consumers' Choice Award recipients. Because of COVID-19, we had to extend the voting phase. And so what we've done is we've combined the 2019 and 2020 award period so that people will be recognized for both years.
Very nice. So we'll be reaching out to all of you. Thank you again, everybody, Ron and William and Christina.
Thank you.
Tricia, Amy, Megan, and Dave, and Duffy.
Thank you very
Have a
much.
good day, everybody.
Thank you.
Thank you.
Bye-bye, everybody.
Bye-bye.
Bye.